Hey everybody, Gary with Basecamp Trading. Let's talk about something that really isn't talked about very much in the trading world most of the time, and that's when not to trade. This morning, the markets were very, very choppy, and this was just a really, really bad environment to trade in. If you're trying to trade in this morning, you were probably getting beat up pretty good most of the time. This is our 30-minute gold chart. And you could see that really starting in the overnight last night, gold just kind of started going sideways. We actually drew in a channel. We had a fairly significant pivot high right here, significant pivot low right here. And you can see, especially coming in the US session, just tails everywhere and just kept rejecting over and over and over at the 50 EMA. Had a little false breakout right there, but then left another big tail. Every time gold would push down, it would leave this bottoming tail to buy it. They would just buy it back up, down, buy it back up, down, buy it back up. Actually, a little false breakout and then buy it back up. But then it couldn't ever stay above the 50. Look how many times, starting back in the London session, that gold hit the 50 and was not really able to stay above it. Or significantly stay above it. I mean, you had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 times that gold kept bouncing around the 50. Now, you had a close right there on that bar, and then it ended up pushing back underneath it. So, I mean, you had a couple that actually barely closed above, but overall the 50 EMA was significant resistance in gold, and still has been significant resistance in gold. And when you see all these bottoming tails and then a zone that you just keep rejecting at over and over and leaving topping tails, that's an indication that you're in chop or just swinging back and forth. And you just can't ever get into any kind of a real trade when you're getting this type of price action. Now, if you're a scalper, there were some scalps to be had for sure. But overall, this was just a really, really choppy mess. And you take a look at crude. Now, crude, we had kind of a different scenario in that we made a huge drop in the overnight. So crude got very extended. And then while the chart was definitely bearish, I mean, we had bearish momentum, bearish moving averages, bearish trend, lower highs, lower lows. The chart was bearish. We just got very extended. And then again, look, you would push down and then leave the bottoming tail, push up, leave the topping tail, push down, bottoming, up, topping, just tails, tails, back and forth, back and forth, back and forth. Again, this is an environment you just can't trade in. Now, again, scalping opportunities, had a couple, even had a bear flag that would have given you a target. In fact, you had a couple bear flags that would have given you a target in crude, but overall, this was just a really, really choppy mess and definitely no kind of a sustained trend of any kind. Same thing with the ES. Look at the ES this morning. This was when the US session opened. You had the big push down and then the big giant bottoming tail. Push down, another big bottoming tail. Really bearish bar to the downside, followed by a big giant bottoming tail back to the upside, and then a real bearish bar to the downside, and then followed by a low high reversal, and then tails, tails, tails. Again, just no follow through on any signals that you received today, and just big swings and chop, and big bars one way, big bars back the other. Just again, no kind of a sustained trend. And when you see conditions like this, just stay away from them. It's okay to just not trade. It's not worth forcing trades and getting chopped up real bad in a really choppy market. So again, sometimes it's just good to know when not to trade.